stellar listing of today has been Tenneco Clean Air. Arvind Chandrasekharan, who's the whole-time director and CEO, joins us after what is a strong debut on D Street. Arvind, thanks a lot for joining in. You joined us here when the IPO opened in the studio. You said we're looking dapper. Well, who's looking dapper? Your shareholders right now, after a clean gain that they've made on the listing itself. But, you know, what we asked you the last time is what we're going to press you on right now as well. Growth prospects going forward. Do you think this, 10 to 12% sort of revenue CAGR for you is sustainable from here on, given your capacity? And at the same time, if you could give us a sense on how much better can margins get from here?
Look, first of all, thank you so much for having me. We're extremely humbled by the amazing confidence and trust that investors have shown towards our company. Again, it's a testament to our employees, our customers, and from that standpoint, we're very, very grateful to our investor base. You saw from the pre-anchor and also the anchor and just the kind of institutions that have invested in us. It's almost like I couldn't ask for a better dream team, right? The who's who of the institutions have invested in us. So we're very, very grateful. As far as growth prospects are concerned, I think what I would say is that we have very strong tailwinds. So one is we are sitting on the India Inc. story, right? So already 4 to 6% of growth we're going to see simply because of India's growth and the market growth rate. But beyond that, we have 3 strong tailwinds. One is content per vehicle growth from legislation, emissions legislation, and premiumization of shock absorbers. So from a clean air powertrain business, the legislation will help us, whether it's BS6 going to BS7, CAFE norms coming in, TREM 4 going to TREM 5, or on the premiumization side, because SUVs are getting premiumized very rapidly, and so the move from static to dynamic suspension is also happening very rapidly. So we expect to get a nice boost from growth from just pure content per vehicle increase. Then exports. Look, right now, today, we're only 5% of exports in terms of product exports. We think that we can grow that very significantly, both from Tenneco India to the third-party OEMs, but also Tenneco India to Tenneco Global. There are tailwinds within the export area, which we're very excited about. The fact that technology is now equalized. Whatever we sell to local Indian OEMs is what we're also exporting. Plus, a lot of the Western OEMs are pushing for more localization or for India to be used as an export base. This is also driving our growth. And the third tailwind is all of this, what I would call cross-selling, bundling. This bundling and cross-selling is giving us access to white space that we did not have before. We had 5 entities that we merged together, and that's giving us additional tailwinds from a growth standpoint.
So 10 to 12% is sustainable, right? More than that?
Well, I won't specify a number, but yes, I think we're going to be in very good shape because of just the natural tailwinds that are helping our business. We are also excited because there's a lot of new technology that we have that is unique to us. And don't forget, I said that earlier when we met the last time. We're very asset light. We're very capitally efficient, if I can use that word. I mean, 57% ROCE. We have a very unique product and process design methodology that allows us to have standardized and modular parts, and therefore that is a very good example of how we can reuse a lot of assets and also use the same standard parts again and again in different configurations to satisfy all our different vehicle segments, for example.
All right. Hi, Arvind. Good morning. Good to see you, Ben, and congratulations. It's been great interacting with you. Prior to the IPO, when the IPO opened up. And best wishes to you, the team, and the family as well. I believe Dad watches our show quite often as well. So regards to them at home as well. And hopefully we interact a lot more. Couple of points then, in terms of what you said.
Thank you so much, Nigel. Yeah.
One is in terms of the realization. As you move from BS6 upwards, realizations could improve. When it moved from BS4 to BS6, what was the realization increase? If you could help us out here roughly on that parameter, point number 1. Point number 2, you want to quantify from 5% exports, what can it go to? Double digits?
Yeah, so very good question. So just look at BS4 to BS6, right? When it was BS4, we had dozens of competitors, right? In BS6, who do we have, right? We have just a handful, just 1 or 2 competitors. And that's because of our unique technology. The fact that we offer technology that's affordable, that is faster time to market, that has lower weight, because weight reduction is also very important for our OEMs. So that would give you an idea of, when technology or complexity or legislation is involved, we think that we have a unique value proposition. Our content increase, which was your question, has gone anywhere from 2x to even 4x from BS4 to BS6. Because remember, you went from actually nothing, just a pipe, to having a diesel oxycat, particulate filter, in some cases even an SCR system. So imagine adding 3 boxes to what was before just an empty pipe, right? So that journey will keep helping us as emissions legislations get more and more stringent. So that's really an advantage for us. Sorry, what was your second question?
Yeah, with regard to exports, from 5%, what will be the target contribution?
Yeah, so look, exports is going to grow way, way, way faster, simply because we're starting from a lower base. And because the tailwinds within exports are so favorable to us right now, we think that we're going to be, again, I cannot give you the exact numbers, but very, very fast growth in exports. But again, because we have long sales cycles, I would just like our investors to be a little bit patient with us, because we have, if I start the new technology now, by the time it gets into production, it takes 1.5 years, 2 years, and then it has to ramp up slowly. So we are a long-term player, and you'll notice that. I think with all our products, you have to kind of be with us, and you'll see the growth over.
Would it be fair to assume that exports grow at 2x the average growth rate of the company?
I couldn't give you the exact number, but yes, it will grow way, way faster.
Got that. Just a couple of questions.
Let's say organic domestic growth.
Got that. Just a couple of questions before we let you go. Just your thoughts on the premiumization of the shock absorber business right now. Because of the SUVization of the nation, so to say, how much would you sell a shock absorber for earlier? How has that grown? And what are the further tailwinds here on? And the second related question to that would be, how would then your margins look? Because your realizations are increasing because of the change in legislature for one part of the business. The other part of the business will see increased premiumization. Both of them ideally should be margin accretive, right? So how many basis points is the headroom for margin accretion here? And what's the kind of premiumization push that we can see in your shock absorbers business?
Great question. So look, the last 5 years, right, 20 to 25, saw the SUVization of the Indian market, if I can use that term. Indian consumers went from buying cars to buying SUVs, to the point where now, 55% and upwards is all SUVs, so every other vehicle is now an SUV. But what didn't happen in the past was the premiumization of the SUV itself didn't happen. So although we got a lot of shock absorber content per vehicle simply because we went from cars to larger vehicles, that automatically required, let's say a bigger form factor for shock absorbers. But now what is exciting is that we are noticing that the end consumers and OEMs now want ride quality to be one of their key differentiators, right? And you can see that across all the Indian OEMs. So 95+% of the Indian market is conventional shock absorbers. Now we see, in fact, I would say even higher than 95%. But now what's happening is the market's moving very aggressively towards like frequency-dependent damping, and I would say even more like, let's call it semi-active suspension to even active suspension. So I think that journey is helping our content to go from X to anywhere from 3X to 4X, and in some cases even 6X, depending on the kind of technologies being used. There's a lot of electronic controls coming our way. You need BLDC motors, you need accumulators, you need lots of sensors. So the paraphernalia around the shock absorber is sort of growing.
All right. Very quickly, Arvind, before we let you go, Tenneco Clean, well, that's largely into post-combustion emissions control and some other engine parts as well. What would the company's role be to an OEM when the migration to EVs gains momentum?
So, look, so you understand that, right? So 50% of our business is shock absorbers. So shock absorbers, ride technology, suspension. So it's totally agnostic to the kind of powertrain we use, right? That's 50%. The other 50% is clean air and powertrain. And even there, we've been lucky that we've avoided certain segments that will go electric faster. So we are totally not present in the two-wheeler business. We're not present in the three-wheeler rickshaw business. Even on the passenger vehicle side, we are mostly in the higher displacement engines that will be kind of slower to electrify. But we're not so worried because between commercial trucks, off-highway, industrial, and even stationary gensets, our content is so high. we find that our actual exposure to electrification multiplied by the penetration rate of electric vehicles in India is like 0.5% today. And even that is not going to change much in the next 5 years because we have enough content per vehicle, we have enough exports, and we have enough tailwinds that will take us there. And just one last point. On the shock absorber side, remember that when you go from an ICE vehicle to an electric vehicle, automatically that electric vehicle requires a more robust shock absorber simply because electric vehicles are denser, heavier, the center of gravity is different. So by default, the content per vehicle goes up significantly.
Well explained.
And margins go to what, 21, 22% in the next couple of years? Or better?
Give you numbers.
Okay.
But all I'll tell you, guys, is that, look, obviously, when you have new technology and there's fewer competitors, we're hoping that these will come with higher margins.
All right, Arvind, it's been a pleasure talking to you. Wish you all the best. Celebrate the day. I think your global's head as well was down ringing the bell at the exchange. So have a blast. And this is one of the few IPOs that appeared relatively expensive, but still the street believes that, in fact, it still has way to go. So thanks a lot for joining in. Lovely visuals there up for you on the screen. Well, time to slip into a break. Chandan Taparia from Motilal Oswal Financial Services is waiting for us with a trading call.